Welcome to Premium Cashflow Real Estate Investing Podcast with SK060. During this program, you will hear guest experts sharing their experiences, best practices, and market insights. We discuss investing in multifamily apartment complexes and how a busy professional can passively invest hassle-free in various opportunities. Your host, SK060, owns millions of dollars of assets and has done thousands of value-add projects over 20 years now. So listen in for insights. Here's your host, SK060.
Welcome to another edition of Premium Cashflow Podcast. Today, I have the pleasure of hosting Shane Melanson with Investing Advantage. Welcome to the show, Shane. I appreciate you taking time today.
Yeah, no, I'm glad to be here. Thank you.
Awesome. So Shane is based in Calgary, Canada, and he has done several decades of investing. Today, he controls well over 20 millions of assets, and he has done a lot of apartment, multifamily projects, and has done, retail, shopping centers, industrial, and ground-up development as well. So today, I think it's a pleasure for me to host him and learn about the different aspects that you have done and share your advice as well. So welcome to the show, Shane. Help us get started as far as, what is your background and, how you came about into commercial real estate space?
Sure. So I started not in necessarily investing in real estate. My parents were both teachers. I grew up in a smaller town. It's a logging town. And my mom and dad, my dad was a principal. My mom was a grade 1 teacher. So at a very young age, I learned a lot about budgets, right? Because you're on a fixed income. And so the more you want to do, you have to essentially be very careful on where you spend your money. Sure. And as a young kid, I didn't like that idea very much. And I remember in elementary school, can't remember what grade, maybe 4 or 5, my dad basically would say, "What is your budget for the year?" And so I would literally have to list out everything from hockey equipment to birthday presents to haircuts to school clothes and supplies. And then he would write me a check and I would go deposit it in the bank. And as a young kid, you get a couple $1,000s and you don't, I would go out and blow it all on brand new hockey equipment and then found out that, you run out of money very quickly. Sure. So I got, 2 paper routes and a few other jobs as a young kid. And that was kind of my introduction into just working to make money. Right. So when you're a kid trading time for money, that's fairly common, I think. And I remember coming back my first year at university, and I was working for my good friend. His dad had a logging company, and we used to build roads. So I had operated D5 and D8, Caterpillar, basically. Anyways, so we were building roads, and at the very end of the summer, he comes to me and says, "Look, Shane, I've got a really good opportunity to invest in." And, being young and naive and not wanting to miss out, I basically handed over all I'd made that summer, which is about $13,000. My dad remortgaged their house. So they just paid it off and took out $100,000 to put it into that deal. Well, unfortunately, we lost everything. So it was painful for me because, I wanted a car and now instead of having my tuition in college paid for, I had to go and work 3 jobs. But, when you're young, you can kind of do that.
Sure.
But seeing your parents lose that much money and unfortunately, we didn't know what we didn't know. And right. I think that, fast forward to today, what I see investing and having done a lot of deals myself and helping others, that's one of the biggest things that I'm always trying to look out for is like how to make sure you do not lose money investing. Now, there's no guarantees. Right. But I can tell you that from my experience, like 95% of the mistakes investors make are preventable if they just understood certain investing principles. So, I didn't get into real estate investing until my last year. I just graduated from university. I was living in my friend's basement and I was saving up a lot of money. I mean, like I said, I worked lots of jobs. And so I always had cash, but there's a big difference between like saving money and trying to get wealthy and then watching what my friend is doing, which, he was basically getting his dad to put up the down payment. He would manage the properties, and he quit university, working night, the bars 3 nights a week, and had 5 houses.
Interesting.
And so that, he introduced me to the concept of investing in real estate up here in Canada. RAIN was the big group. Read Robert Kiyosaki's Rich Dad Poor Dad, kind of got my mind thinking about buying assets. And then I just got 100% into it. Usually when I do something, I don't kind of dabble. I got my real estate license, got my mortgage license, went to work at the city of Calgary in urban planning. Then I went to Sun Life as a commercial lender, and I just, kept meeting more people. And then eventually my father-in-law, who's a big time developer here in Canada and the US, he kind of brought me under his wing and showed me how to invest, how to raise capital, what to look out for. And, we did that for about 7 or 8 years. And then, he said type of thing. So not a straight line, and it's not, I don't want to fool anybody into thinking that investing in multifamily apartment, retail, industrial is an easy task. It's not, but you only need 1 or 2 deals and you can do extremely well. So
sure. So how was your first deal like, the first commercial, let's say multifamily deal? How did that come about? How big was it? And how did you find it, finance it?
Sure.
Shane?
Yeah. So there's a couple of deals that I can think of. I'll tell you one because I think it's in the US, and probably a lot of your listeners are in the US. And so I'll mention that one first. So in 2009, shortly after the credit crisis in the US, and everyone was scared, right?
Right. Absolutely.
I was looking at it saying, okay, I'm up here in Canada. And so we had a short blip, right? Like prices came down, but they went right back up because really the fundamentals were there and the banks were still lending up here. Whereas in the US, it was a bit different.
Sure.
So I wanted to get into the US because I saw the long-term viability. And so we basically took the US and then said, where can we get to in 4 hours? Where's their job growth? What's similar to Alberta? And so Alberta being oil and gas, we started looking in Houston and then Dallas because it was short.
Sure.
In terms of like proximity. So the first property was 240 unit Class A multifamily in Sugar Land, which is just south of Texas.
Right.
And very good, like it's probably an A area, I would say. Between that and the Woodlands, and the Galleria, those are like really prime locations, if you will.
Right.
So, but it wasn't a straightforward deal because we had to assume the existing debt that was there. And I should say, like, I was part of this deal, but this wasn't Shane putting it, like I put it together, if you will, but I wasn't the main. I had a small stake in it. I just want to be very clear.
Sure.
So in any event, 240 units, bought it for, I want to say about 82, 83 a door. And this is like my philosophy was, the same product in Canada would be double, if not triple.
Sure.
So
sure.
I couldn't imagine that you could replace it for less. You couldn't, even if you got the land for free.
Right.
And so really it was just a matter of, can we get the debt? And so with, I can't remember if it was Fannie or Freddie, but we had to pay it down a little bit. And it was challenging, but at the end of the day, that deal, let's just use kind of round numbers and say it was 20, and then 5 or 6 years later sold for 32, 33.
Wow.
And during the time it was paying well over a 10% cash on cash, but that was because it was good timing. Right. And I helped this group, which is my wife's family's company, buy 2 more of those properties. And so there was not a lot of competition, and which meant that we could get the attention of brokers.
Sure.
Right. I reached out to that lady that had it for sale on LinkedIn. So that's how I found that opportunity.
Wow. Incredible. Those opportunities, I wish they exist anymore,
Well, I think you will start seeing them. I'm already starting to see those opportunities. I'll give you an example. So I wrote an offer on a property 3 months ago, right before COVID, maybe 4 months ago, however long it's been. And we offered at, I won't say how many doors, but let's just say it was, how much was it? 16.5 million.
Mm-hmm.
And we were not the highest bidder, right?
Mm-hmm.
Similar to what's going on in the US right now, where
Sure.
it's highly competitive and bidding wars. And it's frustrating, right? Because
right. Mm-hmm.
how do you, you have to be the highest payer.
Right.
And sometimes that means you have to stretch.
Right.
Well, COVID hits, the guy that got it, that won, he drops the deal. The broker calls me back. And now we're working through it right now, where my offer is probably going to be several $1 million less. And I'm the only person at the table because I'm the only one that has confidence right now.
Sure.
So it's not to say that maybe it's the same kind of cap rate that it was in the US when you're buying at 6.5, 7s.
Right.
But the delta between debt and cap rate is 3.5 to 4%. And
Wow.
so your listeners are probably like, and when you stretch it out over a 35-year RAM, that's a going in cash on cash of over 10%.
Absolutely. Now, Shane, given your experience, right, how do you go about vetting the deals? Like, what is your thinking? Like, let's say which area it is, how you evaluate that submarket, and also like what sort of factors you are looking within the asset itself when you're looking at these.
Yeah, it's a good question. I think that there's a couple of things that that go into it. So number one is like determining the city. So the location is critical, right?
Sure.
I want to be investing. I like to invest as close to home because I used to invest all over the country, as far as Toronto, which is like a 4.5 hour flight, right, down to Houston, which is another 4 hour flight. And it's harder to manage. It can be done, but you just need deals that are big enough. So I've got 3 young kids, and so my preference is to be at home and not to travel as much. So
sure.
But I wouldn't just invest in my city if I didn't believe in the fundamentals.
Right.
Okay. So, is there job growth, population, how diverse is the economic base, multiple jobs and diversity. Oh, did you freeze or? Okay. Sorry. I wasn't sure if you're, so those are kind of at a very high level. I'm looking at investing in A and B areas. I don't like to be in C areas. I've made that mistake. I've invested in them. Yes, you can make good money, but frankly, you really need to understand where you are in the market cycle, right? When you're at the top and you're investing in a C area, it better be doing well because it's only going to get worse. Right. And I've like a lot of this you learn from your mistakes, if you will, right?
Sure, absolutely.
Where you don't realize maybe when you're new where you are in the cycle.
Right.
And I would say that probably beginning of 2020, most people would have said we're near the top, at least in the US. Here in Canada and in my market, it's been kind of bumping along. I don't want to say at the bottom, but certainly not at the top because we're heavily dependent on oil, and oil's been depressed for the past 5 years.
Sure.
Really, I'm investing in areas that I think are going to have strong long-term growth. I'll give you an example. We helped a client who, this was in 2016, where the market, so oil, it went from 110 down to $30.
Wow.
And people were panicking.
Right.
But yet when you are at center ice meaning like most people know what center ice is in their cities, right? Like it's like the most desirable location.
Sure.
And it could be pretty much in any major center, you're going to have a center ice. Well, there's a couple here in Calgary, and we helped this group. We went direct to the seller, right? They said, we want minimum 18,000 square feet. We want this, we want that. We'll pay up to this. And so it was, okay, so here's the area. Here's the 5 properties that fit it. Phone them up, direct. It didn't happen overnight, probably 6 months for one of them. And they said, you know what? Things have changed in our life, and now it's time to exit the property.
Interesting.
And so I would say that a lot of the great deals that I find are either working direct, off market, pocket listings, talking to residential brokers. I've got a great relationship with a lot of the commercial agents because I was a commercial broker myself, or a commercial real estate agent. The challenge is those deals are getting heavily shopped, right? And so even though I might be getting the first phone call, I know that they're gonna bid me off someone else, and it's tough to win those. So
Right. Awesome. Now, Shane, you have such a diverse experience between, obviously investing in Calgary and other parts of Canada, and you have done investments within US as well. So I'm always curious to understand sort of that outside in perspective as to, how you think about markets and what differences do you see between sort of the US market versus Canadian market? Give us some like some of the differences that you are seeing. Like, sometimes you will say that, oh, this is a Canadian market, so I kind of have to think it this way. But then you've done deals in, let's say, Houston and Dallas. And so how do you adapt around those differences as well?
So how would I look at it? There's a couple of things that come to mind. So number one, between Houston and Dallas, that's 12 million people. Calgary is like 1.3 million. Mm-hmm. And so the deal flow and velocity in the US is exponentially higher than it is in Canada. So that's kind of number one. Mm-hmm. For example, and these numbers might be outdated, but I remember when I was first looking in Houston, for example, there was like 650,000 multifamily units. Wow. In Calgary, 44,000. Mm-hmm. And there were, 62% were controlled by 5 players. And so really, if you wanted a meaningful portfolio or anything over 40 units, it was just extremely difficult. Right. And which is one of the reasons why I've kind of moved into doing development, because I could buy something for $170 to $200 a door for 40-year-old product. Mm-hmm. Whereas I can go into the US back in the day. I mean, today, let's say even in most of these markets, A class might be $150. Mm-hmm. Well, they have pools, they have incredible amenities, and you would just never have that here in Canada. So I just look at, now obviously taxes are much higher in the US, at least in Texas. And so there's a lot of variables that go into it. Mm-hmm. But I think that deal flow is higher. I think that there is more competition. So it's quite easy to be, I don't want to say quite, it's easier to be a big fish in Calgary because it's a small pond. You go down into the US and I've worked with companies that were in the billions of dollars, and they're a small fish. They're a nobody, right? Right. Because there's just so much out there. So many big players. Right? Absolutely. So you really have to know who you're competing with. You don't want to be the dumb money. I'm highly sensitive to coming into a new market, not having any relationships. Mm-hmm. So I generally will try to align myself with people that are in that market, mm-hmm. and try to bring them into my deal, right? So for example, if I'm working with, I don't want to use any specifics, but it could be HFF, Berkadia, ARA, and maybe cut them in for a small piece of the deal so that they've got skin in the game, mm-hmm. and they know that market, and they're not going to let me buy a piece of crap, because mm-hmm. I don't want to be naive going into these markets. True. Even though you look at it and you say, this looks like a great property. I love the location. It's near a Whole Foods, a Starbucks, a school, transit oriented, yet you don't know what the history is, right? Right. Did that have drainage issues and the foundations are messed up and the seller's hiding it? And I'm going to find out in the spring when it rains. And like, I've seen this, right? I worked with a group where they had $1.3 million in foundation issues. Wow. Mm-hmm. And we were able to resolve it. But I mean, these are the type of things that come up, right? Absolutely. Unsophisticated. Mm-hmm. I just call it dumb money. And so you just really want to just have that local intel, because it's awesome. They're inefficient markets. Right. No, I totally agree with you. Now, Shane, you shared earlier that you provide coaching and consulting to outside clients as well. Kindly share with us, how did that come about, and is that kind of a core passion of yours as well? Yeah. Well, it's interesting how it came about. So my experience up until about 2016 was dealing with big companies, publicly traded pension funds, REITs, and they are very sophisticated and they pay very well, right? Mm-hmm. They'll, like you can generally earn good 6-figure, 7-figure, well, not 7, unless you're in the deal, but let's just say
Six figures.
100 to 200, 300,000 to help them with their acquisitions. Then in 2016, 2017, I came back to Calgary because I liquidated a lot of our deals. I'd sold out of a 1,150 acre development that we did in Ontario. Wow. And I just wanted to be at home and I wanted to focus more on being close to my family. So I started to work locally, and I was with an individual, and we were helping kind of more entrepreneurial, smaller investors. And I get a call one day from a doctor or a physician, and he wanted to look at one of the retail properties that I had for sale. So we toured it, we had a conversation, and realized that this deal maybe didn't make sense for him, but he still wanted me to help him essentially act as his acquisitions guy. And so we went out for the next couple of months. We, identified various properties that would fit his investing criteria, his risk profile, the amount of capital that he had at his disposal. And his big thing was he'd invested in residential and it wasn't scaling the way he wanted. And he really wasn't. He was getting like 1.5% if his property was full, and he was managing it. And so that was just kind of too frustrating for him.
Sure.
And then he had a lot of money in the market. And that was also, he was just weary of that because he had no control. And so we found him a commercial property, a retail property with 5 tenants, a location, not a lot of value add, but he didn't need that because they had rental steps, right? So generally what happens in a rental, I mean, in case your listeners don't know, but when you have 10-year leases, there's usually bumps, they call them, right? So let's say at $40 a foot, goes to 42, 44, 46. Right. Well, if you've got 15% baked in already, you don't need a high value add. You just need to find the right property. Now, this was also, I want to say quasi off market. It was a relationship I had with a gentleman where I used to work at. And so that gave me credibility to be able to take in a new investor that had really no prior commercial real estate experience. And it was, I mean, I don't want to put words in his mouth, but I know how happy and it's kind of put him on the path to essentially replace his very well-paying income as a physician, right? When the deal's paid off in 25 years, it will replace his income. But obviously right now he has a mortgage and whatnot. So, he's probably, earning about 75 to 85,000 a year in free cash flow.
That's
so
awesome.
It's good money, right?
Absolutely.
I mean, it's decent. And then as the mortgage gets paid down, he's generating equity, and this is all from his tenants. And I bet he spends less than 2 to 3 hours a month just talking to his property manager, getting reports. Right. So it's been good.
Awesome. Now, Shane, you have coached several students, helped a lot of clients and things like that, right? I want to, try to understand that when someone comes to you, or like, let's say one of your students and things like that, what are some of the best traits that like a person should have to be, sort of successful into commercial real estate and, take coaching and things like that? What is some of the traits of that mindset perhaps you can share?
Yeah, that is a very good question. Because you're right. I would say that the mindset aspect of it is, I don't want to say it's all of it, but this business requires patience, discipline, long-term thinking. And so I'll give you kind of ideally who I think this is for. It's not to say that's the only people, because certainly you can get into this business with much less money, but it's going to require a lot more time and energy.
Sure.
And so most of the people I help are earning mid 6 figures. They have money to invest, right? I would say usually about 100,000, because you got to tie up properties. I don't teach no money down. It's just, even if you're wholesaling commercial real estate, you generally want control over it, which means you're probably putting up at least 50,000 just for the LOI.
Sure. Right? Absolutely.
So, or once you get to the PSA, I would say that a lot of these individuals would be, how do I put it? Coachable, right? If they know all the answers, then they don't need me. And so I think that sometimes you need a little bit of humility and put your ego. I'm still learning, right? I don't proclaim to have all the answers. I don't think anybody does. What's interesting is the people I learn from, they've been in the business for 40, 50 years. You could not hire them, right? They run billion-dollar companies. And fortunately, I'm married into one family, and I just have lots of relationships, and so I get their time. And I've made these people a lot of money, so it goes back and forth, if you will. But one of the things that I've noticed is when I'm in dinners or meetings or what have you, when I was first introduced to this business, they would ask questions and I would talk a lot. And I would come away thinking, like, why am I the one talking? They're the one with all the experience. And frankly, I'm not learning anything by talking all the time. And so now what I try to do is I try to listen more, right? Obviously, if I'm coaching, people are there for me to, just like this conversation, right? I mean, it's very one-sided because you're interviewing me and you're expecting certain information and insights that I've kind of had. But I would say, generally speaking, in a meeting, I'm the one that's trying to ask questions and listen. And so that then I can take that, synthesize it, and put it into practice.
Interesting.
And I think that, there's some of my best investors, they take action. They don't have to have all the answers, because if you're waiting to have everything perfect, you will never take action. You need to have enough, right? Because you don't want to make stupid mistakes, right? That's why I call it, like, in my opinion, you need to understand the game of commercial real estate, right? Finding properties, financing them, fixing them, understanding who the players are, the properties. So once you have that foundation, and let's say that can take, depending on how long and how much energy you put into it, 2-3 months of pretty continual training. And then once that is there, then it requires execution. Then it requires, okay, so you learned it. Now go have a conversation with a broker, with a seller, with a lender. And everything you learned, like, that will help you, but you're going to make mistakes. It's inevitable, right?
Awesome.
I mean, it's like trying to learn golf by reading a book, and then you go to a golf course and you swing and you realize you have no idea what you're doing.
You got to act and practice as well.
That's right. And you're going to make some mistakes, and but hopefully what you do is you make small mistakes, and then you learn, and then you come back, and then you have conversations. And that's why when I coach, it's like weekly, right? It's like, okay, what did you do? Show me your pitch deck. Show me the offer. How did you underwrite it? What are your assumptions? And then we just kind of run through it and we role play. And really the idea is you're just, you're really improving as you go. And so that every time you do a deal, you learn something new.
Absolutely.
I mean, I don't know your experience, but
no, that's very true. That's very true.
No two deals are the same. And so you can't have, here's the one way to do a property, inspection, or here's the one way to do this. It's nuanced.
Absolutely. There's no master plan that exists. I think the more you fail, the more you learn, and the more different type of deals you do, I think you understand the details of the business as well. And,
exactly.
And now, Shane, you wrote multiple books, right? This one specific book, like the club syndications and how wealthy raise money and invest in commercial real estate. Talk about it. How did that come about? It sounds like you are, sort of opening the doors of how elite gain their wealth and rise to the top. Give us some genesis as to how it came about and what was your sort of experience around it.
Sure. So I think you asked the question and I was thinking of one answer because that's the one that kind of immediately came to mind. But as you were asking it, I was also thinking, I'm like, okay, well, both my parents are teachers.
Right.
And I never wanted to be quote unquote like a teacher at a Catholic or public school, but I really do enjoy helping others and educating, right? I mean, you can go on my website, you can see all the blogs and articles I've written, all the videos. And so I was getting asked to go for coffee frequently, and usually from what was interesting, a lot of commercial real estate agents saying, okay, like these are the guys that are out there selling it, but Shane, how do I raise money? How do I actually do it? Right? Because I'm making that group over there $1 million, $5 million, $20 million, and they kind of get tired of it, but they don't know how to transition from the technician to the investor, the owner. And so I basically said, well, I mean, it's not that difficult, right? I would go for lunch, I'd explain it, and then they would never do anything. And so I said, okay, well, like the way I wrote that book initially was I created an outline and then I hired a group to help me kind of put it all together, if you will.
Sure.
And the outline that I had was 38 pages. They said usually, and the book's only 52 or 54, whatever, right? They said, okay, there's too much in here. Let's just focus on what do you get asked the most, right? Because I was going from start to finish, and I said, okay, let's just focus on raising capital. That's where people seem to have the most challenges, if you will. And so it was just kind of like a 5-part framework, right? In terms of controlling the deal, you know, getting the LOI, how to approach investors, what are your deliverables, what do you say when you're in those meetings? And I don't want to say a lot of it is common sense. I think people will read it and say, oh yeah, that, you know, that is common sense. But until you actually see something, it's not always common sense, right? Because if you've never done it before and you get into those circumstances, like usually it's just like 1 or 2 tweaks and it's like, wow, I never knew that I needed to have that in my deck, or I didn't realize that's how I should approach an investor or how to structure the deal. Like, look, the way I structure a deal today and the way I teach my clients today, I'm like, look, you're not going to get the same rates and the same like returns that I am able to demand because I have a track record, right? Absolutely. When I started, I was doing like very low syndication fee, probably 80-20 splits and a high pref, right? So there's very little left over for me, but I had to prove myself.
Right.
Now I can pay a 6% pref, take 35% of the upside, charge what I'm worth.
Right.
But it's because I have more demand for my deals than I do room for my investors. Makes sense. But people start and it's just, I think, important to set proper expectations so that, you know, and so I don't know if I do a good enough job in the book, but it definitely talks about that concept.
Awesome. Now, you know, over time, Shane, you have an intense family background as to, you know, into real estate, and you've seen and networked with many investors as well. What is some of the best advice that you have received so far that you kind of practice on a daily basis, or, you know, keeps you in discipline every other day?
Okay. There's a couple of things. One of which I will tell you, when I was out, I don't know if it was it was 2 Fridays ago, we were out touring a building and it was distressed. We knew it was distressed, right? And I wouldn't suggest, so distressed for people, like this is something that is high vacancy. In this case, it was like 50 or 60%. Wow. It was a real piece of crap, but it was in a great location. And we looked at it and said, maybe there's redevelopment, maybe there's other opportunities. And I remember my father-in-law, like, cause now we're doing business again. And the reason we're doing business is because he's kind of stepped away from his day-to-day activities on his primary company. So anyways, we're out looking at it, and he says, you know, Shane, I'm just trying to think how he said it. And it's basically like the tenants will find the best properties, meaning if you find the best locations to be at, to invest in, tenants come to you. You don't have to spend nearly as much energy trying to convince someone. Tenants are smart, right? Whether it's retail, industrial, multifamily, I mean, they know where they want to be. So really your job is to identify the locations of where that is.
Right.
And so, I mean, we were talking just before this, right? In terms of where's the smart money? I mean, if you know that a First Cap or RioCan, or you know where the city is putting a lot of money, you can look at that and say, I mean, they are pumping in billions of dollars into this.
Right.
How do I get in front of that? How do I basically, okay, that's maybe call it center ice. Can I find something in close proximity?
Sure.
And I think that people do focus a lot on location, and that would be one way to identify location. But I think the other really key part is the market timing. Like, where are you in the cycle?
Sure.
And what's your exit strategy? I mean, I had a coffee with a gentleman not long ago, and I was showing him this 60-unit multifamily that I'm developing, or that I had in the pipeline. With COVID, we pressed pause on it, but we had the conversation, and he said, well, what's your exit? Like, who's the buyer?
Right.
And I said, well, who do you think it is? And he's like, well, you're mid-market. You're too big for the mom and pop, and you're too small for the institutional.
Right.
And, right. So all of a sudden that's like, oh, that's really important to know.
Sure.
Like even if you plan to keep it for 10 years, you still want to have an idea of if you need to sell or want to sell. Now there are still buyers for what I was creating, but the litmus test of, okay, institutional, 100 plus, concrete, in these locations, this percentage of number ones, number two, or like ones and twos, this many underground parking, mom and pop, right? This is their threshold on the upside. Like it's just really deeply understanding your exit. And then, like we talked about, market timing.
Awesome. Thank you, Shane. It's been a pleasure. Thank you for all your advice. Please share with our listeners how they can, find you and learn more about your company and everything.
Sure. Yeah, no, I appreciate that. I would say easiest place is just my website. You can get my book, go download my, you can download a free copy, at least right now, the PDF version of it. And you can listen to my podcast or any of the videos. And that's just at Shane Melanson, MELANSON.com. And happy to kind of help in any way I can.
Awesome. Thank you. It's been a pleasure. Thank you for your time. Forward to hearing more about different projects and hosting you on a different podcast as well. Thanks for your time today.
You bet. Thanks.
Thanks for listening to Premium Cashflow Real Estate Investing Podcast. Please join us at premiumcashflow.com to sign up for weekly updates, research articles, and more. We will see you again for another great interview with an expert guest.